These formerly high-flying stocks have already been cut to pieces, and it's an open question, though, whether they can get out of the ring alive. How can the beaten-down conceptual stocks make it? Well, if you think we can fix the supply chain crisis quickly, that causes prices to go up. Remember those problems. If you think we can fix the labor shortage, well, that's wage inflation. There may be a lot less federal assistance this year. And if you think commodities can go quickly from shortage maybe to glut, then this bull gets out alive because Powell will take his foot off the brake. But I don't want to be in the conceptual bull ring. But if you don't see that happening, you should not be betting on these stocks. In fact, you actually might want to bet against them. How do you do it? All right, ladies and gentlemen, let me introduce you to the ultimate hedge. Let me introduce you to the ARK, more specifically, the ARK Innovation ETF, which is run by Cathie Wood, the best money manager of 2020, albeit not 2021 and probably not 2022. Now, Wood owns, this is the ARK, okay? Wood owns a ton of textbook growth names, Tesla, Teladoc, Zoom Video, Roku, Coinbase, Exact Sciences, Unity Software, Spotify, Neil Young, UiPath, Intellia Therapeutics. It's kind of a curious amalgam of animals, pandemic plays, cryptocurrency enablers, medical health breakthrough companies, cost savers, and a streaming music service. Now, most of these aren't like the hundreds of junk companies that came public last year, the IPOs and those torturous SPAC names. Wood's favorites are often profitable. Their stocks have only recently begun to lose you money because their momentum plays that now have lost their momentum. Now, they're not like ServiceNow, NOW, Bill McDermott, growth software company. They reported a terrific number last night because they helped their clients keep costs down at a time of rampant inflation. Stock popped 44 points. However, if you want a diversified portfolio of high-quality, profitable companies that make real things, provide real services, and you don't have the confidence to swap out and swap back in, I don't think you can because that timing's hard, I have a brutal solution for you. The ARK Innovation Fund is listing down 30% for the year. See, this is my ARK Innovation, right? And it had another drubbing today. If you think it's headed further down, the cynical geniuses who prey on investors in the form of ETFs have come up with a way to bet against Cathie Wood herself. It's called the Tuttle Capital Short Innovation ETF. Its symbol is SARK, S-A-R-K, and it literally shorts whatever Cathie goes long. It's frankly too cruel even for me. But, man, I want to think of the SARK ETF as the scotch that happened to be my parents' choice. SARK, as in Cuddy Sark. Yep, you can buy some SARK and hedge your position. If you're worried this correction will continue, then stay the course in the stocks that are holding up, and then you use this thing to bet against the growth stocks that are the center of the blast radius. Yark! Now, I don't want this to turn to some kind of like claymation death match like we saw a year ago today with GameStop, where the longs literally set out to crush a bunch of short-selling hedge funds. When you're picking stocks, please don't make it personal. That said, I need you to remember that what's going on here now, the Fed could be tougher than expected. Jay is not trying to bring down the ARK. He's not trying to sink it. It's simply collateral damage from his fight to get inflation under control. I've been in this business for 40 years, and I can tell you that these growth stocks are the ones that get hit hardest in a tightening cycle. So here's the bottom line. Now you know how to bet with Powell if you think that Jay Powell wants to destroy the economy. You pour the SARK over the ARK, and you bet that they all drown, and no one gets out alive.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.